Hey everyone, welcome to the Stock Talk for June 4th. Great comments as always. So let's take a look back at the charts, back at the markets, because today we had a pretty nice rally for the S&P 500 and really all indices in general. So this is SPY daily time frame, and regardless of what news came out of Powell's comments or whatnot, we talked about the idea of how it could be bearish short term, but in the long term, I think things will be okay. And what's happening right now is we've come down below the significant $281 level, which has been significant because it's been resistance in the past. Today, we had a pretty big rally off of that level because what essentially happened was, and this is something I told the members as well, was that today's move, you can see, overtook 4 days of 4 down days, and that is significant because usually when we go up, we move a little bit slower than the way we go down, which shows you once again the resiliency of the market. But are we out of the woods in the short term? And I think the answer here is no, and the reason here is we're still below the significant 281 level. As I had said on the Facebook group, what I said was, if we can steer clear of 281, that's a pretty good sign for broad markets. Right now, we're still nearing this area, so you just have to take that with a grain of salt. And yesterday, I said that here's the 20-period moving average curving lower, right? In the past, we've gotten close to the 20, and then we broke down. Right now, we're coming close to another significant area of resistance, right? This is a significant resistance line. This is a significant resistance moving average. So in that case, we have to be a little bit cautious in the case. While today was a very nice bullish day, it doesn't mean that this is the absolute reversal back to the upside until we can see some follow through. Now, right now, we can't see that follow through. So for what it's worth, today was just an attempt to get closer to the 20-period moving average. So just be a little bit careful if you think that was the bottom, right? So for those who are interested, they might ask this, well, Kevin, what about the 150-period moving average? Isn't that a support in the past? Well, to that point, or this point here, I have to say that has the 150-period moving average act as support in the past? So here, yes, but here, no, right? In some cases, no. So here, we're at a support level, but we really have to see follow through after the fact to see that, okay, this is actually a significant support. One day won't tell us a full story, right? So just want to give everyone that perspective in the meantime for the S&P 500. Now, what is my perspective on this long term? I think 295 is very achievable this year. Once again, possibly even higher highs than that. But right now, we're in a short period of volatility. I think that volatility will be here to stay for a good portion of this month. So that's that. Let's take a look at the TVIX chart. When we look at TVIX today, you can see right now we're actually back at the 50-period moving average. Now the 20 is sloping a little bit horizontally. The 50 is sloping still lower. It looks like this wants to be pushing down, but I would not be surprised if markets, because TVIX right now isn't giving us a clear picture. While short term it looks like it wants to go down, I can see this on the daily time frame easily reversing and moving back to the upside. So this isn't giving us a clear-cut picture of what's going on. What this shows us is that we certainly made a lower high compared to the past few weeks, but that doesn't mean too much. That just shows us what? That the fear isn't compounding by the markets moving lower. Okay. Let's take a look at crude oil. I think crude oil here is painting a slightly different picture. Crude oil short term is having a hard trouble rallying. In a day in which the indices rallied 2% or greater, I'd expect crude oil to be following suit, or that's what I'd like to see, all the indices and even crude oil moving in conjunction in one direction or the other. And crude oil didn't do a magnificent job. As you can see, we had these solid red candles. These are daily candles that for crude oil, And this was the green candle that was formed compared to something like the S&P 500, which moved significantly more. So for crude oil, we're seeing weakness currently. Now, crude oil does and can have the ability to rally back up quite significantly if it's found the bottom. But today's move wasn't very convincing that that was the bottom. Could it happen tomorrow? Maybe. But if crude oil were to move higher, I like to see broad markets and crude oil moving in the same direction. Let's put it at that. Especially since here's the 20-period moving average, right? Look how far away we were, and we still are away from the 20. And in a day like today, you'd expect this to get at least a little bit closer toward the 20, and we couldn't even do that. So that's signaling a little bit more of a cautionary tale, and this is why I continue to be cautionary, I think, this in the next few weeks to this month. It's a little bit more cautionary despite major volatility both to the upside and downside. When we look at natural gas, what you can see here is here's the 20-period moving average. Again, for what it's worth, natural gas is a little bit far away from the 20-period moving average. So it has the ability to get closer before that next move lower. But the trend here is down, right? We have a series of lower highs. We have a series of lower lows. It could go back to the 20 before that move lower, but that trend is designated as lower. Finally, for 4/GC, we see gold continuously moving to the upside and holding an uptrend pattern. This is a good pattern, but this is kind of flipped from natural gas. Whereas natural gas was moving lower and getting away from the 20, this one's moving higher and getting a 20, going away from the 20. So what it needs and what it can do for gold is take a few days of breather before that next push higher towards the next resistance, and that resistance at 1346 that I talked about yesterday, followed by the next resistance at 1363. So once again, thank you everyone for commenting. Keep those comments coming, and if you want me to take a look at any tickers, I'd be happy to do so. I'm going to actually do one of those tickers today. So this was commented by Rico a week ago, so I apologize. I was did not see your comment. So 1 week ago. Okay, so here we go. So there. Well, let's see what happened here. So this is a ticker that you wanted me to listen. You said a week ago, so probably this week, or this was last week. This is the candle that you saw. So this is a highly volatile stock. You can imagine we're in the, this is a penny stock, right? We're in the dollar ranges here at 0.37 cents. And then out of some news, maybe it's data or something that was released from this company, it moved from 0.3 to upwards of over $1. So this is highly volatile, and it's, when we look at this chart, sometimes it's very difficult to stomach a move like this. When I look at this chart is telling me that up moves have been unsustainable in the long period of things. And what do I mean by that? When it moves up, somehow, some way, this stock continues to push lower. So that's, I think, a word of caution for this one. While it has popped off of whatever news that came out, this doesn't have to be an absolute reversal for higher prices over $2. Okay, until we can see some sustainability. What is sustainability? For this one, at least a quarter of a year or half a year of sustained uptrend for this one for me to say, hey, it's out of its danger zone of being under $1 or $2. It has better potential. So you just got to be careful with this one, especially with these therapeutics company. All right, I'll do last one. This is what by Coolio. This was posted last week. BRZU, which is Brazilian 3X ETF. So this was posted last week, and this is moving higher. So this is a pretty decent uptrend. I like this chart quite a bit. What we can see here is a dive lower towards 1993, and we see what, a reversal back to the upside We have moving averages curving higher as well. And we've actually moved past some moving averages. We moved past the final moving average of 150. So that's good to see. I think this looks better in terms of an uptrend. And there's, I think, potential more upside for this one. So this one looks good. I like Coolio. Good job. And this one looks good. All right. And with that, thank you everyone for watching this video. Hope to hear from everyone soon. Check out the course. If you like this video, just simply hit the thumbs up button. If you didn't like it, feel free to hit the thumbs down button. I'm good with it either way because you're giving your opinion, which is, I think, what the stock market's all about. It's not me. I said this all the time. It's not me just, telling you about my thoughts. It's about everyone telling me about all your thoughts, and then we come up with the best judgment call for which direction a stock, equities, or the markets are moving. So take a look at the course if you're interested. The link is in the description box. Have a great day. Happy trading.